Hey there, did you mean to do some tax planning to lower your 2024 tax bill, but life got busy, work got crazy? Maybe you just forgot? No judgment, seriously. It happens to all of us. But here's the thing, even if it's 2025 right now, as you're watching this, and you're staring down at your tax bill, you might still be able to lower your tax bill for 2024 using a solo 401k. I'm the Squasher of Regulatory Impositions, or the SRI for short. My arch nemesis, the Internal Revenue Service, or IRS. If you haven't noticed, SRI is the IRS spelled backwards. Coincidence? I'll let you be the judge of that. Today, I'm breaking down what a solo 401k is, how it works, and why it might be the tax-saving opportunity you didn't know you still had. Okay, let's dive in and squash some tax confusion like only an SRI can. Okay, so first things first. What even is a solo 401k? It's a retirement plan just for people like you, folks who are self-employed or own a business with no full-time employees, except for maybe your spouse. What makes it awesome? You get to contribute to it as both the employee and the employer. That means you can save more and reduce your taxes in two different ways. So if you made income in 2024 and you're working for yourself or running a small business, or maybe you had a profitable side gig, this plan could still help you lower last year's taxes right now. Just keep in mind, with traditional pre-tax contributions, you're not escaping taxes entirely. You're just deferring or delaying them. You'll still pay income tax when you withdraw that money, whenever that is. But the timing matters. If you happen to be in a lower tax bracket later on, that deferral could mean big savings. It's all about playing the long game smartly. Here's how to know if you qualify. Do you run your own business, maybe as a freelancer, consultant, contractor, or sole proprietor? Maybe you've got an LLC, S Corp, or even a C Corp. Do you have no full-time employees besides a spouse? And are you trying to save for retirement and lower your tax bill? If you said yes to those, you're probably in. And here's what makes it even better. Even though 2024 is over, you might still be able to contribute to a solo 401k for that tax year if you open the plan before your tax return deadline. Let's talk deadlines, because this is where people either win big or miss out completely. There are two key dates to keep in mind. First, December 31st, 2024. If you open your solo 401k before the end of the year, great. You can make both employee and employer contributions in 2025 that still counts for 2024. Second, your business tax filing deadline in 2025, which includes extensions. If you didn't open the plan in time for the December deadline, you can still open and fund the employer side of a solo 401k if you do it before your filing deadline. Here's a quick rundown. Sole proprietors, April 15th or October 15th if you file an extension. Partnerships, March 17th or September 15th. S Corps, March 17th or September 15th. C Corps, April 15th or October 15th. That second option is a game changer. It gives you a second chance to claim a deduction for last year. All right, let's talk money. If you're setting up your solo 401k now in 2025, you can still contribute for 2024. Here's how it breaks down. If your business is an S Corp or a C Corp and you pay yourself a W-2 salary, you can contribute up to 25% of your wages through your business. If you're a sole proprietor or single member LLC, it's usually around 20% of your net profit. And the best part? These are employer contributions made by your business. That means they're tax deductible, a direct hit against your 2024 income. Some solo 401k plans also let you make after-tax contributions and convert them into a Roth account. This is what's known as the Mega Backdoor Roth. Now, you won't get a 2024 tax deduction for doing this, but don't write it off just yet. Once you convert those funds to a Roth solo 401k, that money grows tax-free. And as long as you meet the conditions, which include being age 59 and a half or older and having held a Roth account for at least 5 years, you can withdraw funds from the Roth tax-free as well. That's why I call money in Roth accounts in a potentially never tax again bucket. To me, this is the most exciting part of a solo 401k. Under IRS Section 415C, the total limit for all solo 401k contributions, including employee deferrals, employer profit sharing, and after tax, is $69,000 for 2024, or $76,500 if you're age 50 or older. So your mega backdoor Roth contribution is whatever remains after your other contributions. It's one of the most powerful strategies for long-term tax-free wealth building. Just make sure your plan actually allows it. Not all providers do. And sharing from personal experience. Over the years when I was eligible, I had contributed major six figures using this exact mega backdoor Roth strategy. And I'm proud to say that if I play my cards right, I have the power to control whether I'm ever taxed on any money in that account ever again, and so could you. Okay, let's say you crushed it in 2024 and made more than you expected. Awesome. But now you've got a big tax bill staring you down. A solo 401k lets you rewind the clock a bit. Make contributions in 2025 that reduce your tax in 2024. Reduce your 2024 income. It's one of the few clean, straightforward, and legal ways you can still make last year's tax situation better. And you get the added bonus of growing your retirement savings while you're at it. So if you're thinking, this sounds great, what do I actually do now? Here's the simple playbook. Step 1, talk to someone who knows this stuff. Don't DIY your retirement if you're unsure. Step 2, open your solo 401k. Make sure it's before your tax deadline or extension date. Step 3, calculate how much you can contribute. You definitely don't want to guess here, especially with different rules for different business types. Step 4, file your taxes, or better yet, get that extension submitted so you keep the contribution window open. Even if you waited a little too long, you still have time to fix it and possibly save thousands on your 2024 taxes. Need help? That's what I'm here for. Thanks for watching. Stay heroic, stay informed, and keep squashing those regulatory impositions. See you in the next mission.